Hi, Dave Kanicki here with the Farm Equipment Editor's blog for January 7th, 2014. It is 2014, so we might as well kick the new year off and talk about what the expectations are for the year ahead. For farm equipment sales, the speculation has to start with commodity prices, and the general consensus calls for the three major crops, corn, soybeans, and wheat, to stay about where they are today or even slip a bit. But when it comes to ag economics and forecast, one of the experts I like to check out regularly is Gary Schnittke, professor in the Department of Agricultural and Consumer Economics at the University of Illinois. Last month at the 2013 Illinois Farm Economics Summit, Schnittke said that corn prices are projected to average near $4.50 per bushel for both the 2013 and 2014 production years, versus an average of over $6.60 in 2012. He said, over $1 per bushel price declines will significantly reduce gross revenues on Illinois farms, as it will for farms in all grain producing states. Another source, the market research firm of Grain Analyst, expects 2013-14 old crop corn trading in a range between $3.75 and $4.50 for much of 2014. They say, we also see the 2014-2015 new crop corn trading at $3.50 by 2014 harvest. In his presentation, Schnittke goes on to say, even with cost declines, 2014 incomes are projected lower because gross revenue declines are larger than cost declines. Note that while the projected 2014 net income is significantly below the 2010-2012 levels, it is still higher than the average incomes during the 2001 to 2006 time period. He said, for most farms, lower incomes will not cause financial stress, particularly as most farms have built financial reserves during the past several years. However, there will be a cohort of farms that face financial stress, says the U of I professor. These farms have large percent of their acres cash rented at high cash rent levels. Almost by necessity, these farms will have to lower cash rents so as to not face large losses in 2014. Schnittke goes on to say, lower farm incomes will lead to two adjustments for most farms. These include reducing expenditures for machinery and other capital goods, as well as cash rents on farmland with above average cash rents will likely need to decrease. According to the professor, from 2010 to 2012, capital expenditures on grain farms enrolled in the Farm Business Farm Management Program averaged over $100 per acre. This compares to an average capital expenditure of near $45 per acre in the early 2000s. Much of the higher recent expenditures can be explained by higher incomes and the desire to shelter incomes from taxes through depreciation and expensing resulting from machinery purchases. Now, reductions in machinery purchases are necessary as incomes have declined. This is not a surprise. With lower incomes, farmers have less to shelter, and with the generous depreciation rules currently expired, it's intuitive that farmers have less cash and incentive to invest in new machinery. Schnittke confirms what most of us already know. As our colleagues from the Cleveland Research Company illustrate in each issue of the Dealer Sentiments and Business Conditions Update, cash crop receipts correlate very closely with new equipment purchases as shown in the chart on the screen. In the most recent issue, the accompanying chart shows the USDA's updated crop supply and demand forecast for the 2013-14 crop year and points to a 13% decline in our simplified cash receipts proxy in line with the November forecast. The chart illustrates North American high horsepower tractor and combine sales on a one-year lag versus our simplified farm cash receipts proxy using the three most important crops, again, corn, soybeans, and wheat. If historical trends hold, this would imply that 2014 could be a challenging year for equipment demand versus 2013, as the correlation between equipment sales and cash receipts has provided a good proxy for future equipment demand. So this is our starting point to get a handle on the year ahead. But, as the Danish proverb puts it, it is difficult to make predictions, especially about the future. Thanks for checking in, and we'll catch you next time.